This is CC. Welcome to the Orbit. It is Wednesday, December 20th. We've got futures slightly lower this morning, which is a rare occurrence lately. Usually we see the futures green every morning. We'll see if there's any meaning to today's pullback or if it is simply the market running into some gamma near all-time highs in a lot of these indices. So more to come on that, but we are looking at the desktop version of Options AI right now. This is a weekly candles chart, which is new, and you are going to be able to find that up here with this toggle that I'm showing here. And we can, of course, zoom out. You actually do have a zoom feature on this chart, which you can zoom in with your touchpad or your mouse and things like that. And what we're seeing here, and we've even got a max version of the chart here without the expected move, so that can be helpful for a lot of people going back in time. So back to the market, we've got a 0.4% expected move. Only about a 0.7% expected move out into the end of the week. We do have GDP, PCE. We've got a couple of economic data coming out the end of this week. This expiry is fairly important because there's a lot of gamma at these levels that could potentially clear here. There was a lot of gamma that cleared last week's expiry, and we've sort of seen this like stair step higher in the markets. It's really evident when we look at IWM charts. This is something I've been mentioning in the orbit recently. Now that IWM is at 200, it's run into sort of a wall of gamma. It did the same thing down here at like kind of this 185 level, and it did the same thing here at this, sort of 175, 180 levels. And this stair step higher is basically an index trying to rally and rallying successfully, but then hitting sort of these walls of gamma. These walls of gamma it runs into, it either gets rejected or eventually it breaks through, and that breakthrough happens a number of different ways. One of them is just that gamma expires away and it kind of clears the market and allows the stocks to rally through that. The other way is basically the sellers get exhausted at that level. So if you think about it this way, when IWM was 195 or 198 and it's running up to 200, there's a lot of 200 calls. And the owners of those calls have stock to sell above 200 at a certain delta. So down here, that 200 call, well, way down here, that 200 call might have been 10 deltas. Then all of a sudden it's 20 deltas, and then it's 25 and 35 deltas, then it's 50 deltas. Then it gets above that 200 line, and it's 75 deltas. Eventually it's 100 deltas, and they're done selling stock, hedged out. So that's the way that works sometimes, and we could be seeing that. But at the same time, we're going to see some gamma clear at the end of this week. Now, of course, that's into very slow holiday trading. But in this case, it's also with year-end changing and positioning and marking up and all that kind of craziness you see at the end of the year. But be aware, because there is something else going on in the market. And if we look at the Qs, the SPY, you're probably going to see this across the board. There is heavy call buying to the upside in a lot of these indices and individual stocks as well. Are you looking at those stocks that make up the Russell 2000? There's a lot of upside call buying. We're seeing it again in the, you look at this chart. Where are we on the historical chart? Look at, we're right here. So those people that are buying these upside calls in these indices are basically positioning for a breakout. And what that means is they are long a lot of upside calls, retail institutions, things like that. And on the market maker side, this long gamma that we've been talking about in the market might actually turn into short gamma situations. And this is something we've been talking about on the orbit quite a bit over the last month and a half, in particular with the Russell 2000, is if you do start to see a frenzy of upside call buying, you might actually see a VIX, a 12 VIX, become a 15 VIX because the market is going higher rapidly. And it's because of upside call buying, and it's because of market makers getting caught off sides, being short cheap calls at very low vol levels. And then as stocks start ripping higher, they have to catch up and buy stocks, and then they accelerate and they become an accelerant on those rallies. And if you're thinking that that sounds familiar, the last time we really saw that across the market was during the meme stock era, where there was a lot of upside call buying in a lot of these stocks. Let's just go back to IWM real quick, because this would be the where you would really see it in a lot of these small cap names. Is we would see it just like the meme stock era, but much, I don't want to throw that out as a direct comparison, because that was crazy, and this, it's unlikely that if this were to occur, it would resemble anything like that. But think about it in a mini sense, a mini meme stock era, where you see this sort of frothy behavior where there's some upside call buying, and then all of a sudden you see some sort of volatile moves to the upside. You're starting to see that in IWM. Look at this, it's sort of going vertical. Now it could completely get rejected at this level at 200. Everything kind of goes back to normal, and we sort of see a market that has both red days and green days, and a VIX at 15 or something like that. Or you could see a complete, this vertical line continue, and then you're going to see some crazy moves in individual stocks. That is something to watch for. I'm not saying that that is going to happen. I'm saying that is a possibility here with all of this upside call buying in the market. So something to be aware of. Now back to the product right here. There's a completely new control panel over here. If we were to look to the upside, let's say in IWM, as we stare at it, we're going to go call spread. We're going to select an expiry. Let's say we wanted to position for the first few months of the year. Let's just go to March here. And we are getting an expected move-based call, 200, 215. I believe the all-time high at IWM is around 230. So this is just basically saying, oh, we're going to start the year off with a, kind of IWM kind of going vertical. You can change the calls here, the different call levels, make this more out of the money if you wanted to. And it is a pretty sophisticated visual trading platform here on web. As I drag these around, I can get my strikes exactly where I want. I can see where that lines up in the past. I can move the entire trade up and down. Let's just take it down a level. So you get the picture here, right? I've just made this an at the money call spread. I get my risk reward instantly updated here, and then I can go right to the ticket. So I just wanted to highlight some of those changes on the web desktop version of the platform.